Good morning, everyone. My name is Brent Salmon. I am a principal portfolio manager at the World Bank, focusing on agency-backed securities markets. And I would like to ask my panel to briefly introduce themselves.
Sure, thanks, Brent. My name is Yuran Guma. I'm in the Latin platform team within the Blackrock's Trading Liquidity Investments Group. And my team basically provides a sort of linkage between the portfolio teams and our Latin platform.
Hi, my name is Frank Malarkey. I'm from Credit Suisse. I run global markets change, and single security is one of the projects that we're concentrating on.
Good morning, my name is Jason Valentino. I run the structured products trading desk for MetLife, supporting all of our products across ABS, CMBS, mortgages, CLOs for the enterprise.
Great. I'm Joe Bartolana, Barclays Capital. I oversee our securitized products globally for both trading and financing of securitized products.
Greg McDonald, I'm from Citigroup. I'm in charge of product management and development. My interest and engagement is primarily focused on the client impact and the product impact to single security.
All right, gentlemen, thank you for taking the time this morning to share some insights on the single security. I know for us it's a very important topic. A year from now seems like a long ways away, but obviously we need to be prepared. So, Iran, first of all, I think this will be some informal questions. Hopefully, you can give us some insight into how your firms are treating it. But Iran, is your firm engaging other market participants? And if so, how in the various aspects of the single security, both investment clients, index providers, trading platforms, vendors, pricing vendors, as well as custodian banks and others?
Sure. So the short answer is yes. Very early on, we engaged with various market providers, so starting with index providers, custodians, trading platforms, and others. And as you alluded to earlier, there's many aspects of the single security initiative that we as an investor have to think about. So you have clients, again, you have the impact of the index, you have the exchange piece, and so forth. So in order to address all of these questions, we as BlackRock decided to put together a internal working group, which basically was set up about over a year ago, I think. And then as a result of that working group, we created various work streams really focused on client guidelines, the compliance impact, the technology impact, and other aspects. And I think just to show the extent and really the focus that we've had on single security, there's been about, I would say, close to 20 different teams across BlackRock that have really engaged in this initiative. So we've had groups from client relationship management, legal, technology, investment accounting, tax, compliance, analytics, financial modeling, risk. I could go on and on. But as we made progress within our working group, we felt more often than not that we needed to engage with other market participants. So at that point, we started reaching out to various market providers. So in the case of the index, we reached out to Bloomberg as well as Citi, trying to understand what the impact of the index would be, and specifically the cohorts. And we sort of had very constructive conversations where we went back and forth, providing some ideas as to how this the exchange, specifically the float compensation, would impact the index, and how the index providers would incorporate that into the new, not the new, but the MBS index going forward. And I think one key aspect of that has been to really have those calls on an ongoing basis. So every month we've had a sort of a catch-up call to see where we stand as far as the progress. Another aspect of it has been the data aspect, where we've engaged with EMBS. Again, very early on with Larry here at EMBS, we sort of had, say, at one point calls almost on a daily basis, where we tried to understand really the impact to the data disclosure files that were coming in. And obviously, we'll continue that partnership with EMBS and Fannie going forward as Fannie goes through their transition to the single security data disclosure format. So another aspect has been the exchange, where we actually engaged almost on a weekly basis with SIFMA, Freddie, and other market participants to really find a way to structure this exchange in a way that it makes sense for our clients, and at the same time, it doesn't trigger the various issues that we talked about when it comes to the exchange. So I think that there's been sort of our engagement with other market providers, again, from the index to the data and as well as the exchange.
Great. Jason, at MetLife, as a pretty significant investor, how is your firm engaging some external and internal partners to make sure that everyone is ready for the go-live date of the single security, both on trading platforms, accounting systems, and maybe some other IT systems, as well as your regulators?
Sure. As we try to prepare for single security, we start off with the early parts of the transaction process. So we're talking to our external vendors. For us, that is going to predominantly be the Aladdin platform and the TradeWeb platform. That's where we're asking the questions, and we're trying to bring the Aladdin team into all of our smaller teams within the building. We try to put them in front of our operations, try to put them in front of our settlements team. We try to have them speak to our reporting sides. What I've found is the front office finds out about single security, follows it, gets all the updates of the single security. But when you move after the front, beyond the front office, the information flow is not as plentiful as you want it to be. So we're starting with Aladdin, we're starting with TradeWeb. After we bring the operations team on, we're talking to, we pretty much shift then internally. That's where we bring our portfolio managers, that's where we bring our finance team, that's where we bring out our reporting team, and we're really presenting to them a series of questions. We've had endless meetings with them, and we said, what are you going to do when we have this unsettled transaction? What are you going to do when I'm not able to tell you exactly what securities we're getting settled? And we try to ask a series of open-ended questions because it seems to make it real for the other teams that we need. We haven't solved all of it. There's still a lot to do, but we find most of our work's being done on the internal sides of the business.
Great. Joe, switching gears a little bit, as a trading counterpart and a market maker in as was mentioned earlier, an extremely large, liquid, and important market, how is your firm engaging your internal groups and external groups to make sure that everyone can trade this security starting next spring?
Yep, thank you for that. You know, the journey started last year, you know, with bringing different groups together to try and socialize the single security initiative. You know, very quickly you find out who knows what within the firm and where information you may have gaps in the organization. And we saw how broad, you know, of a swath that it cast, not only in trading, but also on the financing aspects. And in financing, it's not only doing repo with our customers, but it's also, you know, Barclays borrowing money from our lenders and making sure that our tri-party partners are engaged as well. That certainly matured earlier this year into a program-wide group that cuts across all of our transaction cycles in the firm, front to back, and touches on many of the certain areas that you've just heard about, you know, legal, credit, settlements, finance, product control, P&L, and certainly trading. You know, the one thing that we are certainly sensitive to is how we're using information and where that information sits. We have great partners with companies that were just up on the stage before, with the MBS, Broadridge, and Yieldbook, and it's a matter of how we engage with those partners and make sure that we're listening to what they're doing and how we integrate that into our platform.
Great. Frank, also, how do you go about it, your firm, making sure that you're ready to trade and settle these securities?
Sure. Very similar to what Joe outlined. First of all, just from a timing perspective, while the conversion looks like it's a June event, we actually need to prepare way in advance of that. The trading could start as early as January on the forward market for the TBAs. So therefore, we really are talking about more like a January timeline in terms of getting many of the changes installed in our own applications and our market connectivity to various different organizations, such as FICC, who facilitates forward trading on behalf of the broker-dealers and the marketplace. So we really are talking about not a June event, we're really talking about more like a January event. with a very large migration event in June. So we are looking at different aspects of the project. Breadth data is certainly a key consideration early in the cycle, but you need to facilitate trading, exchanges, market exchanges, pricing. All these are aspects that we need to front run in order to be able to record the positions and transact with our clients. When you get to the actual conversion, we have what looks to me like a parable, right? Where we have three blind men looking at an elephant and trying to describe it to each other. And as you go through the marketplace, you have dealers and Freddie Mac looking at one way, you have custodians looking at a completely different way, and then you finally have a client base, which is made up of various different types of organizations, investment managers or single fund, hedge funds. And they all look at it differently and with different requirements. So I think we are running into something with the conversion process that honestly we're not, at this point in time, fully on board with. I think the current outline that Freddie Mac is workable for organizations like a broker-dealer and some of its client base. But as we go through the rest of the process with our client base, we're realizing that the client base has a different set of requirements and that we need to incorporate those requirements in order to make this an effective conversion. So that's something we need to do, honestly, more work with. We need to partner with other vendors and see where we can establish the right market connectivity so that unintended consequences of the exchange, like a tax event, is not recorded. So we need to work through those requirements and make sure that we get as smooth as possible this conversion.
Great. And Greg, how is your firm going about preparing to trade the security?
Yeah, I think much the same way. Frank touched upon. We have a fairly large working group that cuts across our analytics team, our sales organization, our operations team, our middle office. And I think generally the approach that we're taking, I think the obvious things are the easiest to address and to plan for, but it's the fringe use cases or the aspects, whether it be the conversion process or the ongoing trading that end up problematic. So I think we spent a fair amount of time whiteboarding, speaking to clients and understanding the way that they need to view the conversion and the way that their behaviors are going to change if at all post conversion. I think the other aspect is I think we need to assume that certain elements of the plan as it is today are going to change, or at least that we're going to need to be prepared that they change. So, often that nimbleness with respect to supporting a product is a differentiator for us and enables a successful conversion. So.
Great. Greg, on another topic, there's a lot of projects and initiatives within your firm, as everyone's firm, particularly in the MBS market with TBA margining and some other aspects. So how are you competing for time and resources within your firm, and how are you managing the resource needs for this transaction?
Yeah, I mean, obviously there's a fairly large initiative around margin in the asset class that has devoted a lot of time and effort. That's, I'd say, fairly mature, compared to single security. But ultimately, it's about planning. It's about planning for use cases that, again, we may not have anticipated or we don't anticipate. And it's engagement. So there's a fair amount of education at a very senior level within our firm, and trying to ensure that the impact of this is understood at every layer of our organization, and that we have appropriate engagement from our technology organizations, our finance organizations, and our business leaders.
Great. Joe, at your firm, how are you managing the resource needs to make sure you have enough resources?
Honestly, it's been a challenge. Certainly, I think everybody feels the same way in this room. The product itself, RMBS, has been under a great period of change over the last couple of years, and it's going to continue that way. At Barclays, certainly we certainly worrying about 4210, MiFID, and also the Brexit rollout. So competing for resources, is challenging. And what's really important is, as I stated earlier, we started this journey last year to make sure that we at least started socializing that to the different governance boards and up through the executive team as to what's important, and to make sure that we have the right bandwidth identified within the firm so that we can carry this program of work across all of our different units and infrastructure partners. It's really important that we benefit from the work that's been on MBS Novation, 4210. We know who our key partners are, and we make sure that they are sensitive to this and are part of this journey as well. Using those same resources, using the same technologists, using the same compliance people and the risk partners is really important to the execution of something as broad as the Single Security Initiative.
Great. Jason, as an investor at a pretty significant firm, what is your process for determining and making any needed changes to maybe your investment policies, working with the internal folks, external folks, as well as the regulatory environment?
Sure. When you think about a single security, when you think about the changes going through to the mortgage market, the front office typically has to sponsor the event, sponsor the project, sponsor the change, and pull together all the teams. The struggle with that is you're taking time from their daily business. You're bringing them into processes with a very long period of time before you reach the finish line. It's really challenging to say your project, which is starting or needs to be completed in 2019, needs to have more resources, needs to have a higher priority. Those are just typical battles that you come across. When you think about what you need to do and what you need to do with changes, we definitely bring in all the teams I've said. We definitely bring in our portfolio managers and our legal teams. The legal teams help the portfolio managers who are dealing with clients think about the impact. Our legal team lets us figure out if there's any impact from a regulatory standpoint or what guidelines may say. The legal team helps bridge the gap and bridge some of the understandings. We definitely have tried to start making changes where if there is new documentation being written, we'll make sure there's UMBS, we'll make sure it's defined in there. So we'll definitely start socializing it across the PMs, across all the environments, so at least people are familiar with the idea of it. It's definitely proven to be challenging. And when you think about this in June, when you think about 4210 and MSFTAs in Q1, that really is a very condensed time frame for a lot of changes to the mortgage market. It was really unfortunate that MSFTA got pushed back. We do have some concerns about the volume of changes related to that and the single security all in the first half of 2019.
Great. Iran, what's your process for identifying and making any needed changes?
So luckily, we sort of put this single security project into the non-negotiable/regulatory bucket. So that's put on it a lot of eyes from a firm perspective. And also, we made sure that we have the necessary resourcing when it comes to development and planning. I think one of the things that we've thought about is what is really the impact from an investment policy perspective. So really, you have two areas that we need to be concerned about as an investor. One is the 817H, which is really the IRS diversification test, which states that no portfolio can have more than 55% in one investment, no more than the 70% in two investments or issuers, and so forth. And we really continue to work with the GSEs to really provide some regulatory relief on that area. Another aspect is really the impact to client guidelines. As folks here know, there's many institutional investors out there that have specific thresholds as to how much they can hold in terms of Fannie and Freddie holdings. And what we've done, we've had this sort of small working group with compliance, client relationship management, legal, really to go through the IMA agreements and our compliance engine to understand the impact for each specific client. So once we've understood that impact, the number of clients, the number of portfolios involved, we sort of came up with a couple of solutions or recommendations for clients, and that's going through now through a vetting process with legal, with our client relationship management groups, and once we have that sort of socialized and sort of figured out, then our next step is to actually reach out to clients with our proposals.
Great. Frank, your firm has been working on this for a while and thinking about it. Have you identified any hurdles as your firm is preparing for the single security?
Yes, we've been involved for the last 2 years, really, and probably our front office probably the last 3 years in this project in terms of the different requirements, the different goals of the program. And what we realize is that as much as I want to look at my internal process, the reality is that's just scratching the surface. Really, I need to talk through how I really engage with my client base, how we engage with the industry, what the format and what the process is to facilitate the cleanest possible way. It's almost irrelevant what I do internally if my client base doesn't come along with me or my company. So what we have to establish is a way to communicate what we are trying to accomplish collectively. And that is, to me, the biggest part of this project. There are single other issues in terms of how do we deal with tax, which is probably not as big deal to the broker-dealer community, but it's certainly a very large impact to the client base. But also the risk concentration limits of issuers. Our firm doesn't quite understand how to, particularly because we're a Swiss firm, doesn't quite understand how to deal with the GSE risk limit monitoring when the UMBS TBA is a sort of a bilateral, transaction, but with two agencies, it just sort of has a hard time trying to understand: is the risk with Fannie? Is the risk with Freddie? Is it, what percentage of the risk is appropriate for the TBA transaction? That's sort of an ongoing discussion we're having with our risk teams. So it quickly becomes a firm-wide issue in terms of, what is literally looks like to be an operational event, but reality is it's from a risk and monitoring perspective quite different. But again, as much as I look at my internal processes, they're solvable. They're things I can accomplish. But my engagement with my clients and our way that we think the transaction should be facilitated is the sort of key risk to this program, at least the way I look at it.
Great. Greg, what about at your firm? Have you identified any hurdles or concerns?
I think the largest thing is around the conversion itself. I think when we talk in concept about how the conversion is going to work, it made a lot of sense. As we sat down and we mapped out, mechanically how we would start with a transaction, how we would communicate the request to exchange golds for UMBS, how that information would flow through our customer base and on to Freddie. From a practical perspective, who that would create problems for. So, I think as we mapped that out and we understood further the potential constraints that we had as a dealer community, and the potential hurdles that would create for the investor base and custodians, it became fairly apparent that we needed to come up with or at least reopen the discussion about the mechanism for exchange and facilitating an exchange that would not bloat industry costs, that would not bloat the consumption of counterparty credit or operational risk. I think, and from our view, that the conversion process and the outcome of the path for conversion for the industry is probably the issue that is of the it's the greatest risk to the success of the program. So I think we're very much focused on that and working with our partners at Freddie and other industry constituents through SIFMA to ensure that we do this in a way that that really constrains the amount that we spend on this as an industry, because I think that ultimately will be critical in terms of ensuring that the program's success.
Great. So we'll start this question with Joe and maybe ask some others. So when and how will you begin to discuss the single security with your broader client base? I know you've had some discussions.
Yeah, excuse me. The intent is once we get a little bit more clarity on the IRS ruling and really come up with some real solutions, that's probably 2 to 3 months away where we start having conversations in earnest with our customer base. We've been reaching out to various types of customers to start understanding the impact in the formation of new pools, gestation repo, and our agreements, and making sure we're sensitive and that they're sensitive to things that we'll need to incorporate. But for the exchange itself, the outreach, we have not started that in earnest. We're really waiting for the ruling and our solutions. We have a couple different solutions depending on what way we go with the tax implication of what we're going to put in front of our clients. One of the things that certainly we've discussed internally, and we received guidance from the SEC early on. These are not trades; they're exchanges. Okay, and you can think about processing that one of a couple of different ways. You can do that through your trading systems and leverage your trading systems that handle large volumes, and you can process that trade as principal or as agent. Okay, if you so choose. The other methodology that certainly we're looking at is really bifurcating the process, the impact on Barclays and trading and financing versus just doing the exchange itself and creating a tool for customers to do the exchange separately. So we have a couple different options. It depends on how we're going to execute and the tax treatment, that's how it's going to be treated. If it's a basis implication, we're probably going to leverage our trading systems. If it's something other than that, we'll go with our other options.
Right. Frank, how and when will you start reaching out to your broad account base?
So we've already started. We started last year in concept, talking to our clients, some of our larger clients, about what their thoughts were, trying to get their feedback, how to incorporate what they thought were issues. We started basically a year ago, having conversations with some client base. We found that discovery process is important. Otherwise, we're not taking into account the concerns and their specific issues. As we're realizing is that we have different classes of clients. So we have single fund clients, which are fairly simple, straightforward conversations of do you want to exchange or do you want to enter into essentially a swap of Freddie Golds for a UMBS TBA? Those conversations can be facilitated pretty simply, but obviously because it's still farther down the road, pricing is pretty important, making sure that that process is liquid and the clients feel like they're not being taken advantage of in terms of a pricing dislocation. So we need to engage from a pricing transparency, about the liquidity of the market and how that works. So those types of elements are okay. And then as you deal with the more complicated investment structures, investment managers with the 40 Act funds, they all have different concerns of what their capabilities are. Are they trading generic TBAs, or they have a very long list of specified pools that they want to retain interest in, and how to facilitate that? So you really quickly that it's not a single client conversation you need to have. You need to have multiples, and those considerations are somewhat unique. There is some centricity in terms of the client base. The goal would be try to make that as standard as possible. We cannot, the industry cannot convert 200 different ways. We have to sort of find a common ground, and that's what we're looking to. Once we realize that, that's what we're looking to more of the vendors to help normalize some of that process.
Great. Iran, what are some of the outstanding issues you believe are really key to making this transition successful?
I really think there's a couple items. I think 817H, it's a fairly high priority item for us. And again, we've been engaging with both the GSEs on that front, trying to get some sort of regulatory relief on that. And I think another aspect, another area where we think there should be increased focus going forward is the exchange. I think that's one big question hanging over the market at this point. But having said that, I think we've made quite a few progress. At some point, we're having separate conversations, so with just the investors, custodians, or broker-dealers. And I feel like recently, in the last few weeks, the fact that we've gotten everyone at the table, custodians, broker-dealers, and investors, has been very useful, I think. And I feel at some point, we're going to come to some sort of agreement as to what's the best way to move forward on the exchange.
Great. Jason, just one last quick comment. What do you think are some of the outstanding issues?
Sure. I think the tax treatment's going to be the largest one that impacts us. If we don't get a tax treatment, if we're not able to clearly and efficiently call this an exchange, we'll have a legacy portfolio that will probably stay as is. So getting that clarity put out there and then mapping out how a transaction would occur, working through with a finance team, seeing what they would see, seeing what the cash they would see and what to call that and what that represents will be the next part of it. One of the things we're doing when we speak with the clients and how we try to prepare is we try to give them some alternative ways that we can manage their book leading up to the exchange. We don't probably have as large of a TVA book as many other investors out there. So there's an aspect when you get into this June period where maybe we can decrease the size of our outstanding TBA positions. We've also set up with them that the exchange will be over a series of periods. We're not going to just run right through the exchange. We're going to put it through some test cases. So we've started communicating with clients that it's a little bit of a longer race and not just the gates open in June and we're putting everything through by the end of the month. This is going to be proceeding throughout all of 19.
Great. So that's it for the questions. If we can switch to the polling questions, please. So there's a response device on each of your tables. So if you'll each please answer a few polling questions. Wow, that's a pretty impressive number of people that said they're testing. So is anyone surprised that such a high majority have already begun testing, or would you expect that?
Yeah, I mean,
I feel like
I'm a little bit surprised, is I think that there are aspects to the initiative that can happen in parallel, but I think there's others that have to happen sequentially. I mean, almost everyone's acknowledged, I think, that the tax element to this and the importance that this has on the way that exchanges will be processed. So kind of working backwards from a timeline perspective, there are a number of unknown aspects that are dependent on really what are unknown at this point. So I guess this probably is somewhat of a qualified question in so as much as that there's aspects of your internal systems that you can look at, but depending on the way that we're going to process this as an industry, you may not be addressing or even evaluating the things that may cause the biggest impact.
Great. Next question, please. So, Iran, are you surprised that it's a pretty high percentage as well?
If I had seen these numbers 3-4 months ago, I'd have said yes. But I feel like since about a month ago when FHFA put down an actual date around the single security implementation, that's where I've seen an increased engagement from our clients, from our market providers, and I'd say at this point I'm not surprised.
Do you think, even though the date that was put out was such a long time ago, do you think it was important to set a deadline?
I think so, yes.
Next question, please. So we've seen the other questions were a little bit more, a higher percentage. We're preparing for it, but in terms of assembling teams, maybe not quite as high a proportion have started the work. Is this surprising to anyone? I think at all of your firms you have put together teams, right?
We have.
Correct.
Yes.
I would just, maybe interpret this 32% to be one where, it just shows how much friction is in in support in the market to try and get it all done. And I think people are certainly focused on 4210 and agree with the statement that was made earlier. A little unfortunate that's been pushed back where there could be a convergence here because it is competing for resources. And as I mentioned earlier, it's really important that you really define your teams and get the right engagement and to try and get that number up sooner rather than later, because the change is broad, as we've talked about. You cannot just rely on your vendors to do it for you. So those that haven't spoken to the vendors, you certainly should. But it's about trying to get these teams going. If we're going to get this in place middle of next year, there's a lot to be done, not only within your firm but also for your customers doing the exchange.
Great.
Similar to that, I think a lot of the questions come through the front office, and we seem to be a funnel for all these questions from all these areas within the firm. It puts us in a good position because we know the people who are asking the questions, but we don't always know the impact. There's a lot of this change where we just don't know the unintended impact. We don't know the coding that's behind the scenes and the assumptions. We don't know how we report this information in Ks and Qs. As an organization, you spend all your time trying to build things efficiently so one system feeds another system, and you touch it as little as possible. There's an aspect of this where you're trying to uncover where all those systems are going to be touched, and we're definitely at a point where we're unsure of what that will be. The aspect where we're using the Fannie 01F QSUP, or we're using or repurposing some other generic QSUPs, that's got some concerns for us. We don't know if we have any coding where we just decide to call that Fannie Mae, and we don't know what that means. So there's part of unwrapping all the legacy reporting and efficiencies that organizations have built. That's going to be pretty challenging.
Great. Final question, please. This is interesting, I guess. No one is saying no, but everyone is either positive or somewhat uncertain. Is that surprising to anyone?
I'm surprised. I thought the yes number would be lower, considering some of the conversations that I've been involved with, but this is a great number to see up there.
I'm sure the regulators are very happy that everyone is prepared. Hopefully everyone will be prepared. So that's it on the panel. I would like to thank the panelists very much for your time this morning and sharing some of your insights. I think one of the items that was really pointed out several times is it's one thing to trade the security on a go-forward basis, but there's some indecision on how the exchange program will actually work. So hopefully the next panel will really address a lot of those issues, moderated by Robert Fishman. And certainly as an investor with a relatively significant holding of gold PCs, I'm very, very interested in knowing how I'm going to be able to exchange those. So again, I'd like to thank the panelists.
Thank you.
Great, thanks.